Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just wanted to go over the pump that followed the Jerome Powell Federal Reserve meeting, right? They announced that they're going to raise rates by only 25 basis points. Expectations ranged from maybe they would defer it, 0% increase, to maybe a double increase of 50 basis points. And of course, that left a lot of uncertainty in the market. What do we know about fear, uncertainty, and doubt? It tends to suppress prices. So getting a little bit of a clarification on that definitely helps boost prices. What it doesn't do is it doesn't take us out of any particular zone that we've been in because it is neutral news as it is. 25 basis points is what was expected. 25 basis points is what we got. We've been expecting this announcement all the way since the top of the market up here when all these asset classes, both in stocks and crypto, just became wildly overvalued, extremely exuberant. And we've just been waiting month after month after month after month for the Federal Reserve to actually take some action to fight inflation, to cool down the overheating of the market. And because that expectation was built in, the market cooled itself, right? That's what markets do when they feel that a rule is going to be imposed. They try to front run it. Everyone takes their profit before everyone else. And basically, it's a race to the bottom, right? That doesn't mean that's the primary reason why we were dropping. Of course, we already had our bull run, more or less, and it was time for a correction. A correction in crypto, maybe around 20%, a bear market around 40%. We've had a drop around 54%, 50% so far. And so you can see, like, we're in a bear market. I mean, as far as these cycles go on these like middle time frames, we're in a bear market right now. There's no doubt about that. Are we going to make another higher high, in the charts? We have to wait to see what's going on. Now, if you wanted to consider just the biggest factors that are kind of weighing over our heads, maybe you can think about the Federal Reserve interest rates was probably one of the biggest ones because we didn't know how aggressive they were going to go. They could have really shut down the economy just by just going hard. As it is, they're leaving the option to have, I think, 7 increases, and one or two of them may be double increases. So we could still have some shock later down the line, right? So let's say that in a month, the Federal Reserve decides that 25 basis points isn't working. What we could see is that they could, suddenly just on their own decide that they're going to switch it to 25 basis points, and we could, pardon me, to 50 basis points, and we could see the market take another turn down as markets react to some type of heavier handed, tightening by the Fed. Now, they could also lift it up, assuming like something terrible happened, like the war with Russia expanded or something, and maybe they needed to quantitatively ease a little bit. Then they're not going to be so tight. In that case, we might see markets, kind of spike up suddenly. But all in all, we're just in this neutral pattern, and we got very neutral news. What was one of the other things we were looking for? What was going to be the presidential order on crypto? Well, it turned out to be just really neutral nothing, right? How about the war in Ukraine? Well, that's a mixed bag. We'll get to, the consequences of that. But just on the front of it, what we found is that, of course, the economy got suppressed a little bit because of this. Oil's taking a huge hit, wheat's taking a huge hit. But then Russian oligarchs and these other guys are using Bitcoin, and so it's kind of a mixed bag because, of course, we need the economy to be healthy, but at the same time, you know, crypto is in the news, a lot of people talking about it. So all in all, it looks like it's had a very neutral effect for the time being. Now, there's still something dangling over our heads, which is the possibility of a global recession caused by global inflation. That's not something that's just unique to the United States. It's not just our local politics. We always want to find, somebody to demonize, but the fact is that, the US has been, just having too low interest rates for almost 20 years now, all since those reactions to the war in Iraq and, the Afghanistan wars and the housing crisis and all of these things. The right and the left have come together to decide to prop up their friends in the stock market. We started having presidents like Trump just like basing his entire, the job that he's done by whether or not the stock market is good. And what do we know about the stock market? It's not real, right? It's a heavily manipulated system, just like crypto, heavily manipulated by big players. Just because the stock market is doing well, it doesn't mean that the real economy is doing well. Definitely, there are benefits to having a healthy stock market, but what you don't want is an overheated stock market at the expense of the regular people, and especially at the expense of inflation, where you're starting to see the price of bread and all these things rise. And so, of course, we still have inflation. We have the possibility of a global recession. We have the dangling of the knife of whether the Fed is going to have some double interest rate increases. And so we're not out of the woods. The war in Ukraine could expand and like engulf some NATO country, and then that could require, the US to get into war. All of these things are still putting a lot of uncertainty, a lot of fear, a lot of doubt into the market. And so, here we are. Here we are. Plus, add to that, historically, Bitcoin has had corrections around these levels. Just let me take a sip of my coffee. And so, if we have this type of, uh, you know, this was a rounded top, but, we know that in the past it would have been a blow off top. It's just the institutions controlled it. So if we have a blow off top and then we have the relief rally, what we know that comes after it is a pretty severe correction. It's actually a bear market. And that's just been the pattern with Bitcoin time after time after time. So is the bottom in or is it not? I think it's a little bit exuberant. It's a little bit, moon boyish to just think that, you know, we've already put in the bottom. It's not that it's not possible, it's just that you have to be open minded to the fact that we haven't. We've only come down 50%. Traditionally we come down like 80%. And even if we had a blow off top, we still could come down lower, okay? So I've covered some of those things in previous episodes. I don't think we need to rehash it. I just wanted to outline what all the uncertainty in the market is still about because some of you might be wondering, why aren't we just rocketing, right? If all of this stuff is starting to get settled, the presidential order, the war in Ukraine is kind of, people are buying Bitcoin. If the Federal Reserve didn't do anything shocking, how come we're not just skyrocketing? Well, now you understand, okay? So let's go ahead and just take a look at our golden zone that I marked out, right? This is where we see a lot of support in this market for a top side. And look at here. Looky here. We're actually sitting above it. You notice this price action? We popped up, right? We heavily resisted, but we've popped back up and we're sitting on top of it. Sort of like we did here and here and here and here. And then this was just a bigger version of these things. And what do these all have in common? They're pointing down, right? So this is getting smaller and smaller. The mountains that we're building on top of this golden support band, this golden zone. The mountains are just getting smaller and smaller and smaller. And do we have any reason? Do we have any reason to expect that we're suddenly going to put in a bigger mountain? No, we don't. I mean, one thing that we do have going for us is that we do have a series of, higher lows. This is low, higher low, higher low. But it's not that much, right? It's not that much in the face of all these, lower highs, right? Lower high, lower high, lower high, lower high, lower high. Well, this is the lower high, lower high, lower high, lower high, right? And of course, right now we're kind of in this range. So this is really, we don't need to talk about this price action, but we're really inside of this type of a range. And you can see we're concentrating more and more towards the middle here. If I put on our trusty 5-day, we can see what point in the quicksand we're in, right? Good old quicksand, the good old tar pit where you kind of start sinking underneath it. And I told you there's one thing that just stands out that we haven't turned red yet. We haven't entered this red zone, so we're not there yet. We're not in that red zone yet. But we are stuck in this tar pit, We are sinking and slowly going extinct. And I just want to point it out again. This band matters a lot, right? Of course you have, ups and downs and ups and downs and ups and downs and ups. It's just where's the next down? That's all. Right? Where's the next down? That's what we're looking for. The upside almost doesn't matter if you're still in, the lower half of this kind of tar pit, this Gaussian channel. And so let's go ahead and just mark out our air bubbles for the day. We're sinking, our air bubbles are coming up. We're losing more and more air. We're making bigger and bigger bubbles. Look, we had this wick right here, so this bubble is legitimate. And so we're not able to get to the center of this band. We're just sinking to the bottom. And just because we were sitting on the bottom or had a pump, just like this one, there's nothing impressive that happened today. People got super bullish today. People got super bullish. But why? Why? What made you super bullish today? The neutral Fed news? The news that, the Federal Reserve is going to increase interest rates and that it might have double increases in the future, and that instead of, 3 or 4 increases this year, they're going to have, 7, and some of them may be double. That's not good news, right? That's not good news. That's neutral to slightly bearish news for markets that depend on that free money in order to use it as rocket fuel for overexuberant markets, right? If you want blow off tops, if you want those gold rushes, you need the free money to kind of fund it. And right now, we don't have the free money. Right now, we're looking forward to a period of time, probably years, in which we're not going to have free money, in which we're going to have tightening in the market, right? And possibly a global recession, you know? So, what would that imply? It would imply that perhaps this, tar pit, concept is working out. We're just hanging out here in this golden zone. It's incredible how long we've hung out in this golden zone. When we were back here, I was saying, I didn't think we were gonna just pump and blast off because we didn't have enough time here. We didn't put in a good enough base. But now this base that we've kind of built, it's pretty much as big as this one, right? It's pretty much as big as the top of this one, right? And it's approaching levels that are pretty similar to this one. And so we're putting in a very nice base for a very big move. Whether it's a big move down or it's a big move up, we're putting in a base that's going to support whatever the move is next. And I just hypothesize that it's most likely going to be down. I'm totally open-minded that it's going to be up. In fact, I was extremely bullish, and I was too bullish. I was just waiting to buy in, but I was a little bit too bullish back here. But, as time goes on and as some of these things have stacked up in the market, and as I've looked at the data, I've just started to slowly come to, more of a neutral to bearish perspective. And I have called pumps. I called this pump. I said, you can look back, is there going to be a pump, a chance to pump? And yeah, we had this pump and we had this pump. I wasn't saying like, oh, we're just going to fall to hell right now, like some guys were, right? Some guys have been trying to project the death of Bitcoin like too early. No, there's a good chance that we can claw our way back on top, perhaps of this red zone up here, right? Above, 45,000. As I said, like 60,000 is kind of pardon me, 46,000 is where I want to see us like really hold on to and then get above this type of mid area, right? And I've also been saying that 33,000, if we fall below there, then, might want to have your ultimate stop loss, right? You might just want to exit the market if we break below 33,000 because it could imply, at least a fall to 30 or 28,000, if not much lower. And so that's just my advice. That's just my advice primarily for myself. I'm just talking to myself here. So, you can do what you want, but that's how I'm thinking for myself. And if I put on this lower time frames, we can get an idea of, our price action with a little bit more complexity. And the first thing to notice here is, you know, are we in kind of a sell zone or are we in kind of a buy zone? And in my opinion, we're in a sell zone right now. If you're FOMOing in right now, that's probably not a good thing to do because we're at the top of the range now. Well, we're still in this middle zone, where this golden zone that I've marked out, which just supports the market. And so yeah, we are in that area, which could be considered a support for the top of the market. But we've broken down through it, as if it was made of butter, like many times. It's the whole zone that matters. And so you don't want to buy in this part of the zone. You want to buy in this part of the zone or lower, right? Preferably in this type of an area. These are the areas that I've marked out, which I'd be willing to buy. And for me, primarily, 35,500-ish, you know, 35,000, 36,500-ish. Like these are the areas that I want to buy, right? Buy here, buy here. You could play this, right? You could play this. But once you get into this golden zone, I really don't want to be buying anymore. And then once you get above the golden zone, you don't know when you're going to have a chance to sell. It could be in a year. So, just sell when you can in this area. That's just my philosophy. Again, you can do what you want. That's just my philosophy. And then, we have this type of channel going on. Let me remove some of these things. We have this kind of channel. And as you can see, it's kind of interacting with these buy zones. So technically, the buy zones could be increasing on a diagonal. And maybe you could say this is kind of near a buy zone. But in my opinion, this isn't a very strong channel right now. You can see we just broke through it through here. We keep popping up. We're the horizontal channels are still mostly in play. In this sideways market, the horizontal channels are more in play, at least compared to this upward channel where we start considering these higher lows, right? So if we just ignore these lower highs and just say, okay, let's just say that this is just this chart working its way down, and then perhaps it can work its way back up, right? Do you guys see what I'm saying? So this is kind of a bullish consideration, right? Broke down, bounced, tried to use it as support, failed, retested it, broke down, found new support right here, bounced all the way, found our resistance, retested it, broke down again, found this whole area is our support basically, came back up, tested the top again, And all we're doing is breaking down right now. That could imply that we're going to come back down here. Even though we had a nice day today, it could imply that we come back down here, that we could even test down here, and that perhaps we could eventually work our way up to 50K, right? What's this number right here? 48,000. It just depends how long it takes, right? Maybe 50K, assuming that this is a channel, and it does look like a channel. Nothing about this says it's not a channel. It's a very weak channel. It's a very sloppy channel. It's not very sticky, right? Like these things are just making their own kind of choppy price action through it, but it is being respected. It is being respected. And so this is one of our diagonal channels. Now we could also perhaps just pump this way. See, that's why this area isn't the best area to be buying in, because you have no idea we're going to go down or we're going to go up. You have no idea, right? People could be selling the news of the Jerome Powell meeting, right? They could have taken, a little pump and then take a little profit at end of day, and then maybe it's just back to retracing down to the bottom because we were in the process of finding this bottom, right? We found it here, we found it here, and we hadn't retouched it yet. Now we could say maybe this support is the new bottom, but if we just look back, this has been the bottom, right? This diagonal. So I'm open-minded to this diagonal being a support. But in my mind, we have this horizontal support and we have this diagonal support. And so really, I'm looking to buy in this area. If we have a diagonal buy zone, I'm looking to buy in these areas. I'm not looking to buy here. Unless we break out of this, unless we break above, our previous high here and start sitting above 46,000 and then we don't come back down, we start testing the top of this. And it's a little ways away, right? So again, that's why you buy in this zone and then you take your profits when you can because you don't know what's coming next. It could be that we break down and then we, go to hell, right? So that's very sloppy, but you get the idea, right? This is actually a tradable zone. And you just want to be aware that because we're in this type of wedge, because we're in this wedge, it's not guaranteed that we can reach these levels. And it's also not guaranteed that we can, replenish, our store of assets to sell. So we have to just consider we're just in a sloppy middle here. And, this is our target, this 46,000, and then ultimately to get above this one, to break out of this channel and to bullishly break out of it and maybe have a bull run to maybe 70,000 or whatever. But in other words, like we could just bounce down from 50,000 and then we could end up breaking down. So we don't know what this market's going to do in this position. This is a very, awkward position to be in, to be making trades. And personally, I don't feel like I always have to be trading. There's an expression, always be selling, but you don't always have to be buying and trading. Okay, like just chill out. If you get into these nice zones, maybe buy some. If you get back into the red, then just, start to sell some at these type of levels, right? So many levels that you could sell at. But you see where we've been popping through pretty nicely. And you also see how they're getting smaller and smaller. So potentially we could end up getting, we could end up breaking down here. If we don't pop to the top of this, which is around 44,500, get rid of these ones. Okay, that's better. So if we don't get out of this region, that's why I'm looking for that 46,000. I want to get out of this wedge. If we can get out of this wedge, it means that we're probably in an upward channel and we're not just in a wedge. But if we can't even get through these levels, these mid-channel levels of this wedge, then we're actually at the bottom of the wedge, right? And if we're at the bottom of the wedge, retesting it, retesting it, retesting it, getting pushed down, pushed down, pushed down, then maybe we're just going to break down. So we really want to see a pop up and then we want to see a bullish breakout and sitting up here at 46,000. a number that I've repeated many times in many episodes. This is just for me. Otherwise, I just see this as a trade. We get up here and we start busting out. Then I see that as kind of like a hodl, a hodl moment. And you may want to just play it at like 50K, 48 to 50K. And, well, I'm a trader. You guys can do what you want. Obviously the best hodling buys were down here, but you wouldn't have known it, so you would have bought it maybe on this, confirmation or this confirmation. But if you didn't buy, here, 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 when are you gonna buy? Don't buy on the pump, right? You gotta wait for a retracement, and we're retracing right now. And so there is this kind of, anti-origin line coming up from this area. And you can kind of think of this as like a horizontal channel that just got stretched down because this is more or less like a price action, right? Like if this was a horizontal channel, you would have just seen it like this, right? But it's just been stretched diagonally. So you can still see this is a channel, and it's a proper channel. It had a mid channel and it had the top of the channel. And, this price action came up here, tested the middle, tested the bottom, reached for the top, tried to make a higher high, but, tried to break out of this channel, tried to do something, tried to at least match the previous, but it couldn't, right? And so we knew we were going to break down at that point because this lower high in a diagonal channel downward suggests you're going to break down. And then what do? We tested the bottom of this channel, and then we tested the mid channel again. And we weren't even able to grab the mid channel. Now, the fact that we weren't able to grab the mid channel should have been just a red flag. Oh no, we're going to break down because this thing is going to gravitate towards the bottom, right? And so we did. We lost our footing. We gravitated towards the bottom really far because we weren't able to come back to test the top of the channel. We just totally lost it here. And so because of that, it was such a harsh loss. We just came all the way down. The market decided, oh, we're not going to make any more money, so time to get out. And, that was a logical decision at 59,000. That's where I exited most of my positions. I had some friends who were exiting around 62,000, and they're a little bit smarter than me, but I exited around 59,000. And so I feel comfortable with that because it was a logical decision. We could have pumped up here, got on top here, and rebuilt our support. But, this was clearly a lower low and a lower high here. And so it was time to get out. And the whole market decided that, right? All the smart money decided to do that at the same time. That's why we had this huge spike down. Nevertheless, this channel still exists. This price action, this part of the algorithm, this expectation of price movement still exists in the market. And what you can see is that we made an attempt here. We made another attempt, still rejected. We made an attempt here. If you're wondering why did we reach up so high, we just made another attempt to get back into this channel. Failed. Totally failed. Dropped down again. Finally found support. We're actually testing the bottom of this channel because now this is like a channel below this channel. So we tested the bottom of the channel, failed, retested it, failed, came back up. Now this is interesting. Now we're back into this channel again, like properly. We're properly back into this channel. But once again, the market just rejected us. And again, this could have been the chance for us to reclaim this channel bullishly and maybe just work our way up to here, get above that, get above this type of area, sit on top of it, and then work our way up. This was the chance that we had. Like, if we had a real chance, it was right here. This was the chance that we had. And you know who screwed it up? Putin screwed it up. Putin attacked a nuclear power station. Putin, these invasions and these attacks on nuclear power stations and things like that, it just sent shivers down the spine of the market. And the smart money said, nope, we're getting the hell out of this. Like, we don't know where this is going. And all the dumb money who still wants to be part of this, they keep trying, they keep trying, they keep getting rejected. And the smart money just doesn't want to go along with it. The smart money is telling you, hey, look, we're going to wait for the Federal Reserve, we're going to wait for Jerome Powell, we're going to wait to see what's going on, get a little bit more information, and then, we're just going to chill out in this wedge. And if not this wedge, right, this kind of like a totally neutral wedge, then okay, maybe in this wedge, and we're gonna just build our platform just in case we can launch. But at the same time, we're ready to break down at this mid channel at any time, right? And so, again, we want to see this area. Look, looky here, my 46,000. It's not nonsense, right? This is the top of this channel. And again, a lot of people aren't going to present information to you this way, but does this price action make a lot more sense when you think about it with these diagonals, when you think about it with these, anti-origin lines and origin lines and, all of these, concepts put together? Yeah, I mean, the narrative becomes really clear, right? You can understand what's going on in the world. You can understand what's going on in this chart. And it's not just trading levels. Like that's just robots, right? You could hire bots to do that, right? You just want to trade levels, probably bots can trade better than you. You probably can't even front run a bot, right? The bots are going to front run you. But if you can develop an understanding of the bigger picture of the market, then you maybe have a chance for a little bit more control because what the bots can't do is they can't foresee what's coming. They can't create pictures in their minds about the politics and the geopolitics and the macroeconomics. They can't understand how human beings are going to react irrationally. And so, if you can create that concept in your mind and you can set targets based upon those flaws of humanity, then you can see that any of this area right here is easily going to be a fake out and even possibly a heavy rejection. We have a heavy rejection zone right here, this diagonal, and we have a heavy rejection zone right here. This pink diagonal and this purple diagonal are crossing over right here. So that's two extremely heavy, resistances. Plus we have this mid-channel resistance, which it's just not been able to get over in the last few days. And so we're really stuck below this area. And we need to see ourselves push up. And I think a lot of people are going to get bullish above 42,000 because we're going to break this high. And they're going to get bullish at 44,000 because we're going to be, at the top of this channel. But unless you're understanding all of this together, you need to see that our real goal is to see if we can get up here and then break out of it, right? And so even if we get all the way up to 50,000, right? This is 49,000 area. We still have the chance because if this is a channel, we still have the chance to be smacked down again, right? This is a channel, right? Let's just pretend like this is what was going on, right? Get up here, and then what happens next? Smack down, right? So even if we get up here, this could be a bull trap that smacks us back down, all the way down to 35,000. And look where that's confluent with, This area, this area right here is very confluent with any type of bounce in this channel. If we make it back up into the tops of this channel or the mid channel right here, and we get slapped down, we're talking about this area. And then what are we talking about? Then we're potentially talking about a bounce, right? Maybe this $42,000 area again, maybe we just pump up vertically, so maybe we do get, back into this, this type of diagonal resistance up here. That's why I have my take profit zone, how I have it set up. Right? That's why this is a take profit zone. And of course, if we break down from there, what would that represent? That would mean that we totally lost the chance for this, to recover this channel, right? So if we break down here, we've totally lost the chance to recover this channel. And we've also lost, whatever channel this was, or at least we're talking about some prices, that could be as low as, right? 20,000, right? We could be talking about like 20,000 bucks. And potentially a wick lower. Because, we could, if we're in this channel below here, boom, 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 and we break down, then we could just be so scared that we just have a flash wick down even lower, right? And then we come back up here, maybe find our ground and come back up, right? After a couple months. And so this is critical. Like what happens now is critical. Like, are we going to recover the top of this channel, this top channel, or not? Because we have two directions to go here. And I think that we're set up for the fall. Okay, we're set up to fall. We're set up to, have a bear market correction to reset everything so that the billionaires and the millionaires and the traders and everyone who loves all this good stuff, and taking advantage of people who don't understand these things so they can all scoop up the best prices. These aren't the best prices, these are just middle prices. So they can scoop up the best prices and then go for another run. Now, if we had really bullish news in the market, of course, this is, a fair price, fair market price. And it is possible that we get up here and have another run and that we just keep going. Right? That's why we mark off these levels, right? Because we could just have another run. But also we have the warnings. We also have the warnings. For me, these are just like warning areas, okay? Down here, this is still a buy area, right? Still a buy area. But, if we're following this one, if this is the channel we need to break above, then whenever we touch, this bottom of that channel and we're kind of inside of it, then I think that's a buy area until we lose the channel, until we lose this price. Then I'm going to be I think other types of fears are going to take over, right? Just other types of expectations are going to take over. But as long as we're up here and just like in the middle and in the bottom of this range, and especially if we're above this line, right? Especially if we're above 35,000, maybe 37,000, 35,000. If we're, let's just say 36,500. If we're above 36,500, then definitely we have a chance to recover. And, I would actually take that trade in a bullish way, just without bias, without bias. And then I just sell it when we're back into this, selling area. Okay, I hope that made sense. That was your alpha for the day. Stay safe, guys, and happy trading.